Hello, and thank you for downloading our free guide on how to buy life insurance and not be so confused. My name is Scott Gifford. I'm the president and CEO of One United Global. We tell all of our customers that it's better to be 3 years early than be 3 seconds late. And what that means is we get really busy in life and we've all got all kinds of things going on, and maybe our budget isn't 100% where we would like it to be. Our finances are a little bit tight. Seems like in America today, that's pretty much the situation that we're all in. And we understand that, but we always ask the question, is it going to be more painful to set aside the $20 or $30 or 50 or 100, depending on how much you can afford? Is it going to be more painful to set that aside now and take care of your final expenses and take that burden off of your family? Or is it going to be more painful for your loved ones to have to come up with that amount all at once when that time comes? Now, I'd like to preface that with buying life insurance is just like buying homeowners insurance as well as car insurance. We don't buy homeowners insurance in hopes that our house burns down. We don't buy car insurance in hopes that we get in a car accident, but we have it just in case that ever happens, we're covered. And that's all you're doing with life insurance. You're covering yourself in case something happens to you, your loved ones aren't left with that burden. Now, the two most common types of life insurance are whole life and term life. Let's talk about whole life insurance first. It covers you your entire life. The rates never go up. The death benefit always stays the same, it never goes down. So if you take out a $10,000 policy, when you pass, your family's going to get that $10,000 policy completely tax free. As well, most life insurance policies include an accidental death insurance that doubles the face amount of the policy if you were to die by any type of an accident, whether that's from a plane, train, taxi cab, bus, ship, boating incident, motorcycle, trip and fall, anything that would be other than natural causes. So if you were to take out a $25,000 whole life policy and you died by an accident, your family would receive a total of $50,000. Now, rates vary depending on your age, your health, your sex, and whether or not you use tobacco or not. So there are a couple of health questions. They're really easy, they're really minor, and once we figure those out, then we can figure out what rates you qualify for. The underwriting process is very simple, and most of our, I would say 99% of our customers get approved. There's very few that we can't. Even if you have cancer or on dialysis, or maybe you've been diagnosed with HIV or AIDS, we can still get you covered. Okay? Those are your whole life policies. In most cases, we can cover anybody from the age of the time that they were born all the way up to the age of 85. We can do children and grandchildren riders. So if you're a concerned grandparent, you've got some children or grandchildren, we have policies to cover them for you as well. The next life insurance term thrown out there is called term life insurance. And the reason they call it term is because it covers you for a specific term that you choose, and it's typically 20, 25, or 30 years. Based off the length of the years, the more expensive that term policy is because they're locking that rate in. Let's say you're 60 and you get a 30-year term, they're locking that rate in until you're 90 years old. Okay, so it's going to be a little bit more expensive than, say, a 20-year term. Now, term policies are less expensive than whole life because the rates are only locked in for a specific amount of time, whereas a whole life policy, the rates are locked in for your entire life. You never have to worry about the rate changing. For term policies, you must be in somewhat decent health. You can be a tobacco user, that's fine. The death benefit will stay the same during the term period. So if you get a $25,000 policy, more than likely you're probably going to get a $250,000 policy if it's term, and you lock that in for 20 years. If you die at year 15, your family's going to get $250,000. For most people, we can qualify them all the way up to the age of 65 years old. If you're 66 to 70, we may be able to get you like a 10, 15, or 20-year term, but it just depends on your age. The rates do vary depending on your age, your health, your sex, and whatever you use as far as tobacco or you don't use it. Typically, term policies are good for younger people with debt such as a mortgage. A lot of times you might hear mortgage protection. That's just simply a big term policy. Or say you have a automobile loan, or you might have several automobile loans or credit cards, or maybe you're the sole provider, and if your spouse were to lose your income, they wouldn't be able to pay those debts off. Typically, that's why you would get a term policy. This is not recommended for older people who are simply trying to cover their final expenses. If that's your goal, you're going to want to stick with the whole life policy. Speaking of final expenses, a lot of people just think, well, final expenses are my funeral costs, and then some people today are getting cremated and they say, well, I just want to be cremated and just do it the cheapest way possible, and that's fine. We actually have programs and some things in place to help you make those arrangements ahead of time and save your family money. That's for another webinar. We want to point out though that there are other expenses other than just your funeral expenses when you talk about final expenses. Not only do you have the traditional funeral, which can range anywhere between $7,000 to $10,000. We've seen them as high as $15,000 to $20,000 depending on the quality of the casket and the vault. You've got sometimes there's legal expenses if you have estate issues, if your estate goes through probate or somebody contests your will or anything, you may have to consult a lawyer. If you want to get flowers for your loved ones, there's going to be money involved there. Unpaid doctor bills, you don't know how you're going to pass away. You could be in, assisted living or hospice. There might be ambulatory care. Some of those expenses aren't covered by your health insurance, so those expenses may be left over for your family. There may be unpaid utilities. If we knew when we were going to die, we could pay them all in advance, but unfortunately there's going to be some debt left over. As we said earlier, you may lose income. If both of you and your spouse are on Social Security, you're going to lose one of those incomes. So it might be nice for your spouse to be left with some money so that they can recuperate from that loss of income. We hear it all the time, well, we've got plenty of money in the bank and I'm not worried about it. And I always tell people, why not take out a life insurance policy so that your spouse or your loved ones don't have to touch your savings account? They can use that to live on and survive off of, and use your life insurance policy to pay for all these other expenses. If you have a mortgage or car loans, if you want to leave money for your kids' education, just the regular cost of living, that can all be defined as final expense. And the great thing about these final expense life insurance policies is they are 100% tax free. So when they're paid out, your families are not going to lose one penny to Uncle Sam. You might be asking, well, which plan do I choose? And that's a great question. Between whole life and term life, inside of those policies, they do have things called paid up policies. So if you don't want to pay on the whole life policy for the remainder of your life, you may take an option to only pay on it for 10 years or 20 years or 30 years. Obviously your payment's going to be higher because you're paying a less amount of time, so they have a less amount of time to recoup that payment. But let's say you're 50 years old and you take out a 20-year paid up whole life insurance. By the time you're 70, your policy will be paid up and you don't have to make any payments on it. As well, with a whole life policy, it does accumulate a cash value. So let's say in 20 years maybe things are tight and you need to borrow some money, you can borrow that money from the policy. If you're over the age of 60, we strongly recommend a whole life policy, and definitely if you have some health issues, you're going to want to stick with the whole life policy. Okay? The customers that go with whole life, they're more concerned with maybe the final expenses that they're leaving their family, and they're not really concerned with mortgages or college expenses or car payments. They've taken care of that, so they've taken care of those payments when they were younger. The other policy that we've talked about, term, that's going to be for the younger people that are watching this webinar. They might have some debt. They may have a younger spouse that they. The next policy is term life insurance that we've talked about. The people that are going to want this policy are typically a little bit younger. They may have some debt. They may have a spouse. They may be the sole provider. They need to leave a nice chunk of money for that surviving spouse or for their kids to pay off their estate expenses. They're in relatively good health. They're not really worried about the rate changing the next 20 to 30 years. And really their big concern is leaving debt behind. Now, a lot of people don't know this, but you can have more than one life insurance policy. You can have as many life insurance policies as you want with as many companies as you want. So if you're kind of right there on the border of 50 to 60 years old, you may want to get a whole life insurance policy to take care of your final expenses, and then you may want to get a term life policy to cover you for the next 20 to 30 years in case something happens to you. That's a great way to cover both bases. Now, you might be asking, how do I purchase life insurance? Well, there's two ways. The old way is that you can go up to a local insurance agent company, or they can come out to your house. You can listen to their hour-long presentation. They can present the company that they work for, and they can try to convince you that it's the best thing since sliced bread, but they've only got one set of rates, so those are the rates you're going to get stuck with. Afterwards, you can fill out a long application and go through that painful process, and then you can hope that their company can get you approved. And if they do happen to get you approved, you're probably never going to hear from that agent again because they're just way too busy reduplicating that process. The new way and the preferred way is the same way that you would buy your car insurance or your homeowner's insurance right over the telephone, like Allstate or Geico or State Farm. The great thing about the way that we do business is that you set up your appointment with a licensed agent at a time that's convenient for you. In less than 60 seconds with one of our agents, we're going to give you 4 options from over 50 credible carriers. So all those companies out there that you know of: Gerber, AIG, Mutual of Omaha, Royal Neighbors, State Farm, all of them. But instantly we put your information in, our software is automatically going to pull the 4 best options for you, and then you can decide which option is best for you. Once we're done, we simply do a voice application right over the phone. Our agent guides you through that, asking you the questions. You answer them. It takes about 10 to 15 minutes, if that, and your application is instantly approved right over the phone. And then you can actually pick whatever date that you want the policy to start and when you want your payments to start, and you can do that as far as 30 days out. Most importantly, this whole process is safe, secure, and very swift. You don't have to have somebody come out to your house that you don't know, and your information is 100% confidential, and it is not shared with anybody. What makes us unique in the industry is after you schedule your appointment, we send you a friendly reminder 1 day, 1 hour, and then 10 minutes prior to your appointment via text and email. We understand that you're very busy, and we understand that things come up. Inside of those reminders, it will also allow you to reset your appointment if an emergency does happen to come up. All of our agents are licensed, trained, and they're very skillful in their knowledge of the correct plans and the carriers that are best for you. We expect our agents to do what's right and what's best for our customer, and they are never pushy. Our agents love their jobs because of the platform we provide for them. For your safety and convenience, our appointments are all done via the phone. They're 100% safe and secure. The very first thing that our state licensed agents are going to do is give you their license number at the beginning of the call, as well as their personal cell phone so that you can reach them at any time. All of our calls are recorded for your protection, and like we said before, you can pick whatever date that you would like your payment to start, and you can even move it out as far as 30 days. We want to thank you for watching this video. We hope that you were able to learn the differences between whole life and term insurance. If you've got any questions, please feel free to speak with one of our agents at any time by scheduling an appointment from the link in your email. Thank you, God bless, and have a great day.